Hi everyone, I'm back. This is Brian Neal with Tradetobefree.com and InvestBefree.com. And today I want to talk about some of the recent trading setups we featured in our newsletter and how well they performed, and also show you an example of a really good breakout on a top growth stock. And the stock I want to show you is SUPN, and it's made one of the biggest moves over the past few months in the market. And we featured it here, breaking out of actually a flat base pattern. And it's a little tougher to see on this chart, but if you click on the chart on the membership site and then you go and look at a longer term chart here, you can see more of a flat base type consolidation here. What we did is we featured it shortly after it broke out, and that first pullback and consolidation after the breakout becomes very interesting. And in this case, what we had was what we call a bullish symmetrical triangle pattern. So if you can get a good bullish pattern shortly after the breakout on that first pullback or consolidation, that's often, when it breaks out of that, often a great entry point on this type of breakout. Okay, this stock had a lot of fundamental factors to support a higher price. We feature stocks that have either top growth characteristics or companies beating estimates with rising future expectations. And this stock had all of that in large amounts. So I think the earnings growth was 40-50% per year. Let me just double check here and see what that was. Yeah, over 50% per year over the past 5 years, and they were expected to grow close to 40% in the years ahead, and had a very strong sales growth along with a high return on equity and I believe a good cash position too. Yeah, it had a $1.81 in cash with very little debt. So it had, all the raw growth characteristics to make a big move higher. And the PEG ratio was pretty low on this, as pharmaceutical stocks and biotechs were still depressed and still waiting to sort of coil up and break out. So this was a good timing on this trade. And, again, when you see that breakout, that first consolidation is very interesting. And, like I said, in this case, we've got this symmetrical triangle pattern here, not real well formed, but you could also argue there's a little bit of a cup with handle pattern here too, where this is the cup, and this part is the handle, with the handle kind of trending lower, which is a good sign, and then the breakout. So you've got, a breakout of a larger pattern, and then you've got a breakout of a smaller pattern shortly after the breakout, the first consolidation after the breakout. So my point is that's a really good entry point to go ahead and jump in on a swing trade, and that's what we did here. And subscribers were able to, nail this entry point. And when you get really good at nailing these technical entry points, the real advantage to doing that is that you often have a strong support just below your entry point. Okay, and that's one of the big reasons why you use technical analysis. Okay, if you start buying the stock anywhere through here, it may go up over time, but do you want to be sitting on a 15-20% loss, hoping that it comes back, hoping that there's not something out there that you're not aware of that's causing the stock to pull back? Okay, so that's why we use technical analysis. One of the big reasons why we do that. And if we nail these technical entry points, we can go for a big gain with a tight stop loss. This one worked really, really well, and we can see that it moved, about 50% higher within 2-3 months out of that pattern. So you get the flat base breakout, and you get this little symmetrical triangle or cup with handle pattern, and all these are explained on our YouTube channel in more detail, so you can start looking for these in your own trading. That secondary breakout is often a great time to jump in on a trade. And if the stock has those growth characteristics to really support a higher price and move higher over time, that's a really good combination. And that's what we look for on our site, Tradetobefree.com. So when you log in, you'll see a list of stocks and newsletters. And we'll look at another one here too. You get a date and the ticker is next to it, and that corresponds with the stocks that were featured that day. And if you go to another one here, this is NVIDIA and Amazon, which were featured back in March. NVIDIA didn't reach this entry point out of this pattern, but later it broke out of a double bottom pattern here, and we actually caught this entry point, pretty close to this entry point here on the day that it beat the earnings estimates with the raised guidance, and then it took off from there. That one went up about 30-40%, I think, within a few weeks. We also had Amazon, and that was breaking out more of a flat base pattern. And we can see here that it broke out and really took off right away. But then we have another of these small basing patterns or consolidation patterns after the initial breakout. In this case, it's a double bottom pattern. You can see the small double bottom here with the handle over here, and then once it breaks out of that pattern, it continues to go up and doesn't really look back. Okay, so again, that second smaller pattern, consolidation pattern after the initial breakout, is often a great time to jump in on a stock when it breaks out of that pattern. So I just wanted to give you a couple examples of that too. Obviously all of these aren't winners. There's some losers in here too. And see if I can pick one out. I think this one, for instance, I think actually didn't quite reach its entry point by closing above the downtrend resistance. So if you extend this line down here, it didn't close above that, which is the entry point, as you can see on the chart. But there's some losers in there too. So I just want to make you aware that there's not, you can't go in this without a stop loss plan and having a tight stop loss. I think Alta may have pulled back, quite a bit before it made a nice move higher. But if you subscribe to the newsletter for the 3-week trial, you'll get 3 weeks free, and you can look through all the recent trading setups. Just try it out for 3 weeks, and if you don't like it, that's fine. If you like it, you can go ahead and subscribe. We'll send you a special offer after you sign up for the free trial to continue with it, and you can check out all the setups there. But we've got earnings season coming up, guys, and right now I was looking at Zacks this morning, and some of the preliminary earnings reports. The companies that have their end of quarter at the end of May instead of at the end of June, a different fiscal calendar. I think they said out of 24 companies that reported, 22 or 24, that so far the earnings look really good, and more beat on the I believe top and bottom line than usual. This trend to drop earnings or to reduce earnings estimates before the quarter is less this quarter. So you have fewer companies that are reducing estimates into second quarter earnings this quarter so far. So initial readings are looking good for second quarter earnings. So we're going to have a lot of really great earnings eruptions trades in the weeks ahead. So if you haven't checked out that course yet, that's our number one short-term trading setup. So if you're looking for a trade that lasts, an hour or half an hour up to a few days, that's a great trading strategy. And during the first quarter earnings season, it had like around a 90% success rate with a tight 2.5% stop loss, which is phenomenal when, they move anywhere from 3% to 30% or more within a few days. So definitely want to check that out and get ready for this earnings season, because it may be a really good one this quarter, although we don't know for sure, of course. And next week we have banks reporting, and I'm thinking some of those will be bad earnings reports, but the outlook for the banks is improving, and one of the main reasons for that is that, as you can see on this chart, the 10-year Treasury yield is going into a strong uptrend now, and that's going to help bank earnings. Okay, so that's why the banking index is starting to lift off now, and banks are starting to rally after the successful stress test over the past that were reported last week. And so we got the banks poised to do well. Semiconductors are oversold right now, so they're due for a bounce. We've got the biotechs near a good entry point, the biotech index. So things are shaping up for potentially a strong second quarter earnings season. But again, you have to be ready for any eventuality, and that's what we do on the site. So we'll have our market forecasts updated throughout the week, and if we see a bearish market signal, we'll definitely let everyone know. And that's one of the advantages of getting on the site and taking that free trial. You can see our current market forecasts and know when a bearish market signal has come about, because eventually it will, and eventually we'll go into a new downtrend. But we'll just have to see how the next few days play out and how the market reacts to earnings next week and geopolitical concerns and other things going on, of course, which all affect the market. And the market averages will tell us, which direction the market wants to go in the weeks ahead. And there's certain classic signals in the market that occurred before all the major corrections over the past 15 years. So actually over the past several decades, and we keep track of that signal on the site, and we'll let you know once we turn bearish. Okay, about it for now, and I'll be talking to you in the days ahead. Thanks for watching today. If you liked the video, give it a thumbs up below. And be sure to tap my image here to get notified when our next video is published. And if you haven't yet, tap here to get our top 2 trading opportunities for the coming week emailed to you. Stocks with the right technicals and fundamentals to make a big move higher. And if you want to learn one of my best strategies, tap here and you can learn how to do it yourself.